All right, my friend. Looks like we got a full room and we're ready to go. So, welcome everyone. Thanks for attending this webinar. I'm Dave Scabar, Chief Growth Officer at Amplify. Thrilled to have you here today. Should be a good, thought-provoking discussion. Our topic today, you've all signed up for it, so you know it's Beyond the Buzzwords, how tech is reshaping traditional industries, and perhaps more importantly, what it means for business leaders. We'll explore what this means for you as leaders, advisors, and decision makers. How do you separate hype from reality? How do you position your business to thrive in this new landscape? Things like that. We're fortunate to have Wilson Acton with us. He's the managing partner and direct at Tall Grass Ventures, a leader in ag tech innovation and seasoned entrepreneur who knows what it takes to turn ideas into impact. Well, I claimed on LinkedIn, I'd never say this to his face. My friend Wilson's a guy who knows a lot about a lot. He's got direct executive experience in multiple arenas and is on the front lines where tech converges with traditional industries. This all make him a perfect guy to connect with to discuss the topics of all the mind-blowing jargon and talking real life examples of transformational change in the field, the factory, all thanks to advances in tech. So as long as we're talking disruption and change, this is a relatively new format for us at AHA. This series where we're starting with the end in mind. So because this is CPD, we kind of took the act of finding engaging experts on topics and then finding a topic or sort of whether it's current events, things of that nature that would be compelling to our audience. And we think that we've landed on a pretty enthusiastic expert here in Wilson. So welcome. Does this sound like a topic you're passionate about? And maybe expand on who the heck you are and why you're a guy that's capable of going beyond the buzzwords.
Sounds good. Yeah. Well, first, pleased to be here. For those of you who don't know me, as Dave said, I've kind of sat around a lot of the seats at the table when it comes to innovation and traditional industry. Originally Southern Saskatchewan, from the farm. Farmed for a number of years myself. Came to Calgary building a business while farming in Saskatchewan. Ended up in M&A and corporate finance, so kind of saw things from the professional advisor capacity and service provider in that sense. Built another number of businesses. That's kind of what brought me back into tech and innovation, and now here building Tallgrass as a business in and of itself, which we can kind of talk about, but also, of course, our business is growing other businesses. And so we've got 20 companies in our portfolio now across Europe, as far as Israel, throughout North America, coast to coast in Canada, that we're growing in. Really what we do at Tallgrass is we invest at that intersection of innovation and agriculture and food. And so, have in a lot of ways, a front row seat of how we think about innovation in traditionally, and what's considered a traditional industry like agriculture, even how we define that, even how we think about it, and candidly how we've thought about innovation in something like agriculture for generations. We were doing stuff a long time ago that you would call innovation now, but you certainly didn't call it then.
Right. And, in addition to all your laundry list of titles, one of them is dad, and I'm a dad as well. So it'd be remiss if I didn't comment on Tallgrass investing in growing businesses in the agriculture landscape. So I can't let that just skate by. But as we're going there, let's talk maybe definitions. So we talked, at length previously on, what would be a compelling topic. And we kind of said there's all this jargon, all these buzzwords. Of course, AI will come up this conversation as well. But when we talk traditional industries, maybe layer in what you deem to be a traditional industry and perhaps things as, modest Canadians. We've been on the front row of watching hardworking entrepreneurs for years and years and years, iterating and adapting, and not necessarily perhaps calling it disruption or really innovation. But I think that a lot of farmers and entrepreneurs across Western Canada specifically have been kind of on the forefront of that for years. Maybe share what you believe to be kind of traditional air quotes industries and maybe some of the kind of the landscape that you're seeing from your seat?
Yeah. First, one of the things that we often talk about is kind of what is agriculture. When people hear agriculture, they immediately think farming. And agriculture, certainly the way we think about it, is considerably, more broad than that. If you think, if you know, kind of the Alberta market, right? If you think about comparing agriculture to energy, if you say agriculture is simply farming, that's like saying that drilling is the entire energy industry. Like there's to kind of think about it through that lens. It's an important part of it. Farming, primary production is an important part of it, as is drilling to energy. But there's so much more kind of that happens both pre and post. In that case, the drill bit. And so it's the same in agriculture. So we think of things like fertilizer and crop protection, animal health, manufacturing, tons of manufacturing, supply chains, all the things that happen before stuff gets to the farm. Being kind of upstream the farm, if you put that in the center for the purpose of the conversation, because it's easy to visualize. And then what happens to everything after it leaves the farm? And so how do we take a cow after it leaves the farm and ultimately end up with a ribeye or a bushel of corn, and end up with a whole host of different products. In the case of a call I just got off of, how do you take a bushel of flax seed from the farm and turn it into Burton snowboards? And that's literally kind of the end that they're innovating in. And so that's how we look at it. And that intersects with a lot of other industries, as we mentioned things like supply chains and manufacturing and a bunch of stuff, but also energy, right? Like when you think about hydrogen as an energy, you actually quickly get yourself into an agricultural conversation, because ammonia as fertilizer, we've been using it as commercial fertilizer for basically since World War II, and so we've gotten pretty good at moving it around. And if you're going to talk about hydrogen as a fuel, you're talking about ammonia, you're kind of quickly talking agriculture. You want to talk sustainable aviation fuel and biofuel mandates and everything that's happening there, you're back into an agricultural kind of mousetrap, right? These are things that we can drive from agricultural production. So that's how we look at the lens, very broadly, and that kind of defines how we invest. And then innovation has many connotations, many kind of elements to it. I've got a good friend who always asks me every time we have coffee, are you seeing anything that's really a step change? Not this like incremental change stuff. Like I want a real step change. What's in the book? And it's an interesting conversation, because often at the moment you don't necessarily realize that you're in a step change of innovation. Sometimes that takes time. It's hard to read the label from inside the bottle, is another way of putting it. And an example is barbed wire. Was barbed wire a step change innovation? Well, looking back, it was. It was a big technological advancement in the 1800s. Really built the modern day cattle industry, and actually, kind of ironically, it was the cattle industry that resisted barbed wire as an innovation, because they saw it restricting their ability to move cattle literally over the entire North American complex. And it was everybody else who wanted it to keep the cattle drives out of their backyard. So that was a step change of innovation that we couldn't have today's cattle industry without. But at the time, certainly the cattle industry didn't think of it that way. And now we're talking about stuff like GPS wearables for cattle, to essentially create a digital fence, the same as your Fitbit works on your wrist, for you, telling you it's time to stand up because you've moved so little at your computer. Your Fitbit thinks you're in cardiac arrest.
Are you
Just
in
like
my
that.
office?
Yeah, exactly. Real time.
Well, it's interesting you say that in terms of the energy sector and your example on ammonia. Of course, we're very fortunate to have those resources here on the North American complex, as you put it. It almost sounds as though if you zoom out far enough or you tilt your head just right, everything's ag. And as as someone in the venture space, I suspect that has to govern you in a way that's probably tricky, because you've got to pick your spots and
Yeah.
see where that innovation is really lying.
Yeah, we're not quite as bold as everything's ag, as much as I like to joke around about it, but we would, under our kind of thumb in the wind math, Ag, the way we define it, is roughly a third of the global economy. Once you consider everything around shipping and financial markets, commodity trading markets as they relate to ag, again, the manufacturing and kind of everything that happens upstream, plus production, plus all of the processing by the time you get all the way down to the fork and everything that happens in between, you end up, cross-cutting about a third of the global economy. From our look, it's second really only to energy.
Yeah, that's and when you put it that way, right, you start to look at again entrepreneurs and business leaders. Historically they've got the mandate of doing as much as they can with as little as they can, whether that's efficiency of capital or resources, and look no further again from the agriculture sector of getting access to markets and growing efficiently and leveraging their machinery as much as they possibly can. I suspect that you see that in a lot of whether it's supply chain or in manufacturing. Where are you seeing, I guess, not from a disruption perspective, but the iterative kind of, the step changes, maybe how close do you have to get to start to see those? Is it year over year? Is it decade over decade? Is that innovation happening and at what pace?
Yeah, well, it's different innovations happening at a different pace, kind of depending. And like regardless of whether, we zero in on agriculture or just kind of more generally, like if you're running a manufacturing facility, for example, whether you're cranking out mattresses or whether you're making tractors, like I don't think it much matters for the purposes of like as we talk about innovation, what's happening around us. Like it's fascinating. AI has certainly increased the pace of play on the board. Yet to be seen how some of that shakes out and where and whether that pace increase in all respects is a good thing or not. But and other stuff is more incremental, right? Like the world is awash with barfed AI all over everything, and at the same time, things like robotics in manufacturing has been alive and well, and that innovation has been happening for decades. They were using robotic welders in all sorts of manufacturing process, for example, back into the 90s. And so, we're continuing to build on that. And, at what point does it become something more than incremental innovation? I don't know, but we're building on that. And it's interesting because we can continue to speed that up. GPS assisted steering we've had in agriculture, which is where the first commercial market that technology came into since the early 90s. And, it came out of Desert Storm when the US military was using it. And agriculture was the first market that brought it on commercially. And then it now continued to go. And so is that when self-driving cars started, was in like 92, 93, in the farm? Well, maybe. There was a lot of stuff that happened all the way in between.
Right. And it's interesting, as you say, AI's barfed all over everything. And the term AI to some is, maybe it's ChatGPT and it's glorified Google. And some it's this daunting thing of, whether it's FOMO in my business, if I'm not leveraging
Yeah.
it, what is it? And it seems like if we're not in, it's already too far gone. But to your point, the difference between AI and automation, like are they cousins? Are they
Yeah.
brothers? Are they the same thing?
Yeah.
And what is that process to automate? And it's been around, in the robotic welding, for example, for decades, and in farming, it's been happening. So it's kind of that process enhancement, and it's the next step. And machine learning, or whatever the word du jour is
Yeah.
it is simplifying it down to that automation. So I do like that delineation for sure.
And for sure, like different flavors of it, right? Like to completely automate out, using AI, this whole function of your business, for example. Like the number of opportunities a week that we get pitched just within our business of people giving us AI things to go do our diligence on new portfolio companies for us or automate
Oh
our
yeah.
reporting across the portfolio as an example, or like whatever, right? The AI to read all of our legal documents and solve all of our problems. We see kind of all of this, but at the end of the day, and then you get pitch decks that come in. Like we look at our average is roughly 2 a day, net new pitch decks that we get in. And so we haven't stopped to look because it's kind of pointless. But like, what percentage of them is it greater than 90 that say AI on them in some capacity? Well, in a lot of ways, you even have to stop and you say, like, what are you using AI for in your business? Well, I'm making marketing materials and I develop some copy and I ask ChatGPT to book my holidays and like whatever. It's like, right, but that has now already kind of quickly become the equivalent of going and putting on your pitch deck that I use email in my business. It's like, well, yeah, you better. Like, well, like what? That's not a selling point. That's just existing. I use a cell phone. I use a smartphone.
Right.
So there's an element like there, and then there's kind of all the way over on the other end of can we have it doing all of this deep market research and auto trading, our commodity portfolios and hedge fund stocks and blah 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 blah. Somewhere.
Yeah, it's interesting, right? Because you go from, are we talking about, digital transformation? So what is digital transformation? Is it zero from the goal
Yeah,
line to the other goal line? But at some point it was, starting to use ChatGPT to automate or to
yeah,
transcribe your meetings. And at what point is that transformation, I guess by definition, transformational,
transformation. Yeah,
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 exactly.
yeah.
Uh, so from your perspective, then, you're seeing a lot of this in your pitch decks. You're seeing it in the market. When people start to talk digital transformation, what are some of the kind of misconceptions around that? Like, how would you say people are throwing that around versus what's actually on the shop floor or on the highways or in the fields?
I think there's an assumption, which I don't think is a particularly good one, that um, if you can digitize it, right? Like digitizing or digital transformation is equals good. Like that's a good thing to do. And we certainly see it in ag. I'm sure we see it in other industries. It's like, well, just because we could write software to do it or digitize it or whatever else, doesn't necessarily mean that we need to or should. Like some stuff is just fine, happening the way that it happens. Or maybe said another way, the like compelling reason to digitize this thing, this step, whatever it is, hasn't yet shown up because of the other interdependencies in your system along the way as you go. And so writing, in ag and like lots of industries, we see everything from, I've got an app that now makes all these recommendations, blah, blah, blah. And it's like, yeah, but like I already knew that in running my business. And so, just because it now digitally tells me, I'm like, I don't know if it really works, right? Like I'm a post-it guy. You know what works really well on keeping tasks? Post-it notes. Like for at least for me, I don't need an AI task manager to create more tasks for me. I already know that I'm behind and I'm not doing my stuff. I've got 15 post-its that are telling me that. So, I think there's an element of like, why are we digitizing? And that's a fair question to ask because often what that leads to is, well, is that where we should be starting? We've looked at tech that's using AI in cameras, so computer vision, to essentially make an intelligent way to it's called deconstructing is the magic word, but it's to take a carcass, beef carcass in a plant, and cut it all up into all of the like steaks and hamburgers and parts that go into the boxes that go off the store. So do that in the most optimal way. And so they're using AI through cameras to do that. Every carcass it looks at, reads it, and says, okay, that's 8 ribeyes instead of 7. Go. And well, that's kind of interesting. But if you're not even at the point where you're kind of thinking about how that feeds through your sales desk and kind of dynamic supply management, blah, 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 in that business, in that manufacturing business is really what a packing plant is, then that's probably not where you should start. Maybe you should think about a CRM. That's probably where you should start before you have AI knife cutters.
Right. Yeah, and we've got obviously a number of our audience are CPAs. We have a lot of CFOs on our Amplify roster and in our kind of in our audience, in our network.
Yeah.
So you could see a lot of them say, if they were to helicopter in and look at all these different levers, now we want to look at that ROI. So is is an automated task manager the best use of time and funds, whether it's,
Yeah.
100 hours and $100, is that where you want to spend it? Or, here's how we can get 12% more ribeyes
Yeah.
out of this carcass. Where do we look at that? And so, as a VC, you'll be looking at that from an ROI perspective as well, I suspect.
Yeah,
And
for sure. But like even within our own organization, um, like we have this thing, and we've noticed, and we all do it. I think everybody does it, but we now try to check ourselves on it. We look at something and we go, "Oh, that would be a good task that we could use AI on to be more efficient," right? Like the dashboards that we populate off our whole portfolio, get all this information in. It's very kind of routine. It just kind of calculates up. And so, an analyst spends however many hours, once a month kind of pulling this data. Okay, well, that's really interesting. That's probably a good AI job. But what we noticed is that every one of those suggestions comes often from somebody who doesn't actually do the job, right? It wasn't the analyst who's like, this would be really good for AI. It was from me who's looking into the analyst job going, that'd be really good. And I think we can see that kind of all over, right? The CFO, for example, isn't like, I could really use AI in this box. It's like the COO that's sitting beside them going, you should use AI for automating those financial statements. Huh? I saw that on Instagram.
yeah,
So I
yeah,
think
I'm
it's
sure,
important to
right?
check ourselves a bit on that. Like both be pushed, be prepared to be pushed, but also like be careful about who's doing the barfing of the AI.
Right. So, in your experience then, and with some of maybe your portfolio companies or within your own business, is how do you zoom out and make that evaluation where, this is worth the time, this is worth the energy because of, the maybe some assumptions you make in the future or some redundancies you've had in the past. How do you
Yeah.
evaluate that as a business leader?
From an investment perspective, like from our business of investing in companies that are building AI things, and we invest in all sorts of stuff. It's not just AI, but things that are AI. We're often looking. I always say that often the answer is at the intersections, or in the middle. It's kind of where parts come together. And so we're looking at like, well, is the AI unlocking something that we weren't able to do before, or we could, but it took a huge amount of time and effort. Are we able to get kind of richer data sets? And that actually means something. Like, is it going to change the behavior? So how do we think of it? So like we're looking at it that way. Like, is it causing a real kind of opening or a change in something? And one that we were looking at recently is like DNA soil testing. And so a lot of people, of course, not in the space. What do you mean you would do a DNA test on soil? Well, it's like a real thing. You can get a DNA test on a soil profile and you get a deep amount of knowledge because soil, dirt, is actually alive with all the stuff that's going on in it. And so you can do DNA tests to figure out all sorts of interesting information. Well, it was just kind of like more information, but it didn't really change anything. But now with AI, can we take that DNA soil sampling information and enrich it with three or four other things that actually now starts to unlock answers? Well, that's kind of interesting and compelling to kind of look into. And so that's like the lens we look at it, as opposed to it didn't really change anything. It maybe made it more efficient. Maybe that's okay for AI, but from an investment perspective, that's not going to create like a ton of value. We've just kind of made life easier. It's like email. We went from faxing each other to now we can instantly yell at each other instead of writing it and faxing it.
Right. So I wonder then, from a change of behavior perspective, in that example, or perhaps in the CFO, COO
Yeah.
perspective, maybe we should automate that. I think what it comes down to, and what I'm kind of hearing is, what does it liberate that person to now do with that information
Yeah.
versus, or is this just another data set that we have to bitch and moan about
Yeah.
being accurate or
Yeah. Like,
representative
how
when.
does it add value? If we're still just going to crank out the same dashboard that we're going to interpret, like, listen, maybe the value is just it took 4 people 4 weeks to put that together, and now it takes one person 3 days. cool, that might be enough value in and of itself. But yeah, it's like, well, or are we able to actually up our game on that dashboard that's getting populated because we can now see stuff that we couldn't otherwise see. The impact, an example was using AI to read all of the public disclosures of a bunch of companies involved in supply chain and shipping in the US around their forecasts, their public forecasts of what they were seeing in their business. The big one being Amazon. What is Amazon seeing in their business? Why is that relevant? Well, because then you could correlate through the amount of cardboard, corrugate, that Amazon was going to need to buy in order to make Amazon boxes based on their volumes. So then you could kind of read through, well, what's the commodity corrugate price going to do? And to cut to the chase, like, why does any of this matter? If you're a fresh fruit producer, things like apples and peaches, other than labor, one of your highest costs is packaging, cardboard. So if Amazon is telling you 12 months ahead or 18 months ahead, this is what we think the demand profile is happening in our business, and you can use that signal to now actually like buy one of your main inputs at a materially different price. You couldn't really do that before AI, but you can now. So that's like a change.
Right. And if you think of, I mean, even for the small producers and orchard, like that's a really, really great example that's very close to home, of course, with,
Yeah.
orchards all across Western Canada. Your mom and pop or second, third gen
Yeah.
orchard doesn't necessarily have maybe quite as much purchasing power as Jeff Bezos. So
Slightly different.
you can see how perhaps even that piece that you were talking about
Yeah.
could impact, a small to medium business owner in real time today.
Right.
That's it's quite daunting to consider, actually.
Yeah. Like way too hard of a thing to kind of wrap your head around. But like, there's no reason why you can't do it for diesel fuel as well, which is probably applicable to most people on this call, right? Like, again, it's like, where are the signals, pulling all this data, and then blah, 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 we can get to an answer that we couldn't get before, um, or at least not reasonably.
So what you know what is the risk, or what is the trying to get to a point of, the risk of being left behind or doing things the way that you always have? Because as you say, I already know that the I've been farming here for 5 generations. I know what grows
Yeah.
here. What's the risk of, not adopting or staying status quo? Like, as long as we're talking disruption, that's kind of the antithesis, right?
Yeah, well, so there's some interesting data that I've looked at around like value capture, and so this can be a bit it can be a bit nebulous. It's like, well, do you really? Because it's more like opportunity cost as opposed to value capture. But this concept around kind of where you are on the innovation adoption curve, and there's been a ton of research about this. Everybody's heard the terms about like early adopter, fast follower, laggard, whatever the terms are. I coincidentally or ironically, all of that research, or vast majority of it, greater than 80%, is actually based on a bunch of it's called diffusion of innovation, is the like seminal text that whole like body of work has been built off of. And the data is all actually driven from agricultural innovation adoption primarily in the US, because they did these studies in the 20s and 30s and 40s around the innovation was like new seed genetics, and the way that innovation went through the community by communication channels and all sorts of stuff. And so, of interest, like this whole world of this is how we think about innovation is actually based on agriculture's adoption of innovation, because they could study these communities. Anyway, as you kind of look at that, I think one, there's all that, which I agree with about, as you adopt, even if you're wrong, the learning you get compounds on itself, and you're able to keep kind of moving your way up. And so while, let's say, you adopt an innovation in your business and it didn't generate the value you wanted, and maybe you even abandoned it, the lessons you've learned in that is going to make your next adoption of innovation that much more likely to succeed, and you continue to work your way along over time as that compounds, the value capture of your business of being more efficient, more nimble, maybe it's even just slightly better unit economics, but that compounds over time, and so you steal market share as the market resets, et cetera. And there's been a bunch of research on that, and I think it's true. And so the kind of philosophy I have, for better or worse, is just like just keep trying. I use AI to do legal drafting for me and have been for over a year. Some of that stuff's pretty snappy. Now I'm a trained brain on that, and so you can sift through the trash in it pretty quick. But I wouldn't have the confidence to use it in other ways if I hadn't just tried. Like just kind of play with it, and then you're going to get confident. And now, okay, you know what? We could try it with this thing of whatever, automating well reports, or reading them, or whatever. Or maybe it's getting somebody to make a little AI mouse trap, because this is like a thing now. People will spin up little tools for you.
Right. So I like going back to what you're saying, like don't take your losses or failures and just cast them aside and leave them in isolation. It's
That's where the
athletes,
gold is.
entrepreneurs,
Yeah.
you grow when you fail just as much as when you succeed. So is there that iterative approach, and as you say, you've got the trained brain as a recovering lawyer using AI, you can quickly
Yeah.
audit, like, is this within the realm of possibility? What advice would you have, I guess, on the failing side of things to maybe your small medium business owner or owner operator led business where you know they're making maybe some bigger swings on some of these tools?
Well, I think part of it's like, one, like where are you at? It's back to the comment. Like if you don't even have a CRM, then probably trying to dynamically automate the production floor, maybe is a bit of a bleep. And so, one, let's be real about where you're at. I think that's important. And then kind of keep pushing and pushing on those edges, is good. And the failures, so to speak, in a lot of ways is where the gold is. So also like, well, why didn't that work? What could I have done different? What could I have done better? Maybe what were some of my bad assumptions? I rushed into it. One example is back to this legal thing, right? Like I've been using it to kind of draft certain elements. It's been pretty handy. You can be pretty bespoke with it. And I thought, oh, well, that's kind of push, right? Like, there's whole companies that are built on AI lawyers basically now. And they're charging huge money to some of these legal departments for it. I think Harvey is one of the big ones out of the US. And it's like, okay, well, why can't I do that? Why can't I just dump these documents into it and say, give me the answers? Let's try it. And so I did that, and I got total trash back. Like it was a
Oh,
complete waste of time. Okay, well, why didn't that work? Well, I just kind of dumped a bunch of stuff in and said review. Well, what does review even mean? And like
sure.
all these things. Now, what would have been, I think, so I look at it like, why did it fail? Well, I probably bit off way too big of a chunk, and I just kind of that. I barfed on it and expected something to magically come back. And so now I'm like, okay, well, let's look at it differently. This set of clauses always kind of do the same thing. Well, let's just cut those out and give those to the AI. Hey, review these parts. And if I can do that with, say, 50% of the documents, well, that's actually a good win. And so I just kind of like, I'm just kind of chewing down on it until I get to the core thing. And I think over time, in that example, I could get to the point where I could just dump it in, but I can't start there. I got to work my way along.
Right. And I guess from your perspective, somebody that's reviewing legal documents constantly, that's a lever that you can pull on that drives material efficiency and effectiveness and
Yeah.
use of your time and resources. So I
Yeah.
guess, like you say,
I also view it
taking a
as low
look.
risk, David. Like, because I look at it, I'm like, well, I'm going to look at everything that goes by anyway. And so I don't see it as a high risk thing for me to monkey around with adopting AI. Because I'm like, well, I'm going to look at it. So I'm going to catch the errors, or at least the material ones.
Right. Yeah. It's not a leap of faith so much as, well, let's see what it comes up with. And worst case, I'm still putting it through counsel or I'm still spending material time looking
Yeah.
through it. Yeah. That's a really good point too. Um, yeah. I wonder, so looking at that and understanding again from that use case for you as a VC, and then again, if you think of our kind of audience advising business, being business partners with a lot of owner operator led businesses.
Yeah.
What's kind of the next frontier or next kind of traditional industry that you see picking up a lot of steam and really capitalizing on this, whether it's digital transformation or automation or AI? Where do you see it really leaning in the near term?
So I think there's a couple areas that are really interesting that we're watching. One is how AI is changing the flow of capital, and that's a big kind of statement right there, because it's like, well, how can we use AI, for example, to even just like originate loans or diligence loans more effectively within financial, or like make yet net new products that are based on data that's actually really good data that we could lend against, for example, but historically we didn't have, right? Like this kind of model of give me your financial statements and we run it through the risk department at the Royal Bank and they come up with a number and they dial it down and whatever. Like that was based on, because that's what we had for the information. Well, can we like change that? And so like that's a capital flowing thing, right? Like how can we change that? We think we actually end up creating kind of net new financial products, whether those are insurance products and we're already seeing it in insurance products, by the way. We think it creates net new like lending products or ways of doing that. We actually had a really interesting conversation last week with a bunch of US lenders that are looking at exactly this, like how do we kind of take a step back, first principles thinking, how do we look at this? How do we do this? We want to deploy capital. We're trying to lend in this market. Well, could we do that now entirely differently, but in just as good a way using AI? So I think that's really interesting. But then we're also seeing it change capital flows. Like look at NVIDIA's stock. It's the flow of capital that's happening in the system, private equity, venture capital. Where is it going? Where is it not? The bifurcations it's creating in the market. How is that impacting businesses? And then the other thing that even just today, noticed is that kind of, I don't want to say deep analysis, but really like that strategic thinking, which is a lot of that CFO's job, right? That's the difference between your controller and your CFO is strategy. The same with like, your CEO is thinking like very strategically. The AI isn't real hot at that yet. Like it can help get the information in that can help you make a better decision, but like that actual distillation of here's a bunch of data points, read the tape. What's the tape saying to you? And one of the examples I was using that that we were watching because we're finding it fascinating in our business is the way capital's flowing around globally and what's happening. And it happened before Trump, but it accelerated under Trump, with global disruption, deglobalization, trade wars, whatever the terms are for the world that we're in. That American capital, by and large, at an increasing rate, is staying within the lower 48 states. And so it's creating a lift on valuations in those markets because the capital still has to go to work. People want it working. And so because there's just more dollars circulating the same rough set of opportunities, then naturally it's supply demand, right? So prices go up. But it's creating gaps in other markets. That capital that used to go to Europe or used to come to Canada or used to go to Southeast Asia isn't going there anymore. And so then we're seeing the inverse happening. So the valuations are going down. And so like we had on the same week, we had a company come in out of California, really interesting. We had almost this doppelganger come in out of Europe, equally interesting. Arguably the European was slightly ahead of the American, but like, yeah, you could debate it. So let's call it sixes. One was raising in euro, one was raising in US dollars. Yeah, roughly sixes right now. The California one was at an $18 million pre-money valuation based on where they were in the business. That was the ask. The European, 3. And like that
You're
is
kidding.
Purely, in my opinion, or not purely, but a large part of that is just where capital is pooling and trapped, or at least highly resistant. And we're seeing that all over. We're seeing it in lending markets. We're seeing it in capital markets. Look at NVIDIA's stock. Look at the investment that's happening in the US economy by the hyperscalers alone. There's currently 500-600 billion of growth capex, not maintenance capex, growth CapEx that in the next 24 months that's been announced by the hyperscalers. The number's getting bigger, purely in growth. That is like, if you had hair, it blows your hair back. And then, then you look at Germany, right? Germany is literally the economic locomotive of Europe. It is the star of the European economy. They announced this like unprecedented spending budget, also infrastructure dollars, just like the hyperscalers. Also 500 billion, half a trillion, euro, but US, blah, 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 same. And what are they spending it in? Decaying infrastructure because they are self-admitting of their delayed expenditure over decades. Bridges, railways, pipelines, roads, $500 billion over 12 years. So now stop and think about that. 6, 7 companies in the US are spending the same amount in growth that Germany has to spend just to not go backwards. And so think about like that flow
traditional
and like the compounding
right?
return that has, like it's bonkers.
So that is in your opinion now, that's just so that Germany can get to perhaps a level playing ground or not lose ground over the next 12
years. They
still
have power. And so they still have a road to go to work on. Like that's not growing the economy. That's just like, listen, Canada, we won't get political, but like Canada's had that itis as well, right? Like delay. And that's just like, we can no longer delay. Like the railways are falling apart and it's starting to kill people. So now we got to like build a railway in Germany, fix the one we got.
And meanwhile, the repatriation of capital into the US is just allowing it just churn and go and go.
Yeah. So now they're building factories of production, data centers, and all sorts of other stuff, right? Like it's, I don't want to get into the data center debate, but like either way, like those are growth assets that they're laying down and in a big way. And so think about then how that's going to compound over the next number of decades as those assets continue to be productive. And whether we're in a bubble or not, right? Like you want to compare to the fiber build out of the 2000s, and this is the same, and there's all sorts of stuff like, first off, these are all questions that AI is really poor at answering. Like this is the strategic brain. This is the CFO thinking through all of this data that you're seeing going, well, what is this telling us? Where is this going? And I think it's actually kind of interesting then when you look at it through the Canadian lens, all this major projects office stuff, they're not talking about fixing old infrastructure. Everything's net new that's supposed to get done. It's a new mine, it's an expansion project, it's a new pipe, allegedly on Thursday, it's a new port, or essentially a new port in the case of Churchill, that kind of stuff. Like, there's something there.
Interesting. Now we had a conversation as an organization just today, actually talking about strategy versus plan, and planning and strategy and strategic planning. And, there's kind of a fundamental difference between actually having a strategy and having a plan. How would you say that leaders should think about kind of balancing investment in tech or in the next generation versus just their operational realities of today, business as usual versus new and exciting perhaps?
It always depends on kind of where you're at in the business and kind of the different factors you've got, right? Like if you're in a business for whatever reason that you're just like you're treading water, you're trying to stay ahead, then like I get it. Oh, you should invest in the future of growth. It's like, no, I'm trying to make payroll next month. Thanks, pal. And so like those are real realities, and I think it's important to think about that. You have to be where your business is at. And so if you are having trouble trying to make payroll, as enticing as it is to talk about a growth opportunity using AI or something over a 2-year, 3-year lifespan, you shouldn't do it, right? Like that's not your number one priority. And so the way I think about it, I don't know if it's right or wrong, it's just how I think about it. A plan is how you execute against your strategy, right? Like the strategy is higher, the plan is part of the kind of execution, and then you get all the way down into like the tasks, so to speak. And that's how I think about it. So you're like, your plan continues to adjust and morph. Maybe you get that big contract that comes in, and now you're out of this conversation of I can't make payroll, and you are into growth mode. Or, markets change, right? You want to talk about plans all changing. Again, in the ag space, to most people, it's irrelevant. I saw it actually on a market update yesterday. They closed a major packing plant. Tyson Foods closed a major beef packing plant in Nebraska, and they took a shift. They run 3 shifts at the plant in Amarillo, Texas, and they dropped it to 2. And this happened in the last like 48 hours. And so the comment was like, beef prices are about to go up. And I was thinking about this, and I'm like, well, that's true, I think, at the grocery store. So the person buying a steak, the price is going up. But if I'm a fat cattle producer or even a cow calf, like in a different end of the supply chain, I don't think that's bullish for my strategy at all. They're taking away capacity, right? Like that's the equivalent of closing down refineries. If you're in the E&P space, that's not a good news story. And
Yeah.
so that's offtake capacity. And so thinking about that, be, realistic in what your reality is, and it changes all the time. And so you can have a strategy, but the plan might have to change and reverberate. In fact, it should.
Right. And yeah, I guess just being honest with yourself as a business owner of, what is keeping payroll going and what is business as usual versus that growth plan, I guess
Yeah.
is probably a pretty big risk for, the small, medium business owner, and whether it's across Western Canada, probably
Yeah.
globally, realistically, with all the hype that we're hearing around
Yeah.
AI. Um,
Well,
so
and talk to
then,
your peers, right? Like it's lonely being at the top, right? Being the CFO sitting there and your CEO or your COO comes running in, blah, 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 and it leaves. Like, talk to the other CFOs, whether they're in the same business or different business, because we see it all the time in our business because we're essentially kind of strategically across 20 different ones. A lot of the same stuff is repeating. People have seen it before. So sharing that knowledge, if nothing else, just helps you think through what you're facing, whether it's good or bad.
you see that knowledge sharing, is that more commonplace today than uh, in your professional career, or is there more gatekeeping of data and just, I guess, I don't want to say trade secrets or IP, but just generally speaking, do you see it more in ag and ag tech, or
I
what's
think
your
it's a bell-shaped distribution. There's people that are like growth mindset, they're open, like they're always learning, they're always talking, there's something to learn from everybody. And then at the other end of the spectrum, I'm not talking to anybody. I've got all the answers. Everything's proprietary. I think we can train ourselves to move up and down the bell curve, but and we can change kind of how we think about things. But there's going to be people kind of all the way along, all the time.
right? It's so interesting, right? We'd probably say the same things to your kids as we do. Try to have a growth mindset, and as leaders, or you can be critical and still have a growth mindset, or curious and still have a growth mindset, of course. So
Yeah.
what other kind of skills or mindsets do you think are critical at this stage for leaders moving forward in this kind of disruptive environment? What are some of the things that you see that are consistent across, if you're to separate, I don't want to call them winners and losers, but maybe faster learners than slower learners?
Well, so maybe I'll come at it kind of almost that macro lens that we look at all the time that we're staring at. We are super bullish and tremendously excited. We think all of the stuff that's happening around us that are all the reasons to be upset, kind of all of the red lights that are flashing across the proverbial board, from political unrest to deportations in the US to China trade wars, like whatever. Ukraine, Russia, is that going to get done? Is it not going to get done? Like what's going on? All of those kind of red lights, when we stop and we step back and we look at, every one of them represents a really bright green light opportunity. And that's now, to be fair, like that's we're biased, like that's the lens that we approach the world in. Like we are equity investors trying to kind of grow the future. We look at things long term. We look at kind of 10 years is where we start looking in terms of our horizon. And so by nature, we're already kind of optimistic by default. But that's certainly the environment we see. It's certainly the environment as we see relative to Canada and the opportunity set and businesses here. That doesn't mean avoid the US. There's a ton of opportunity for Canadian business to go to the US. There's also a ton of opportunity for Canadian business to go into other markets. And kind of where and how we play. There's a ton of interesting kind of growth vectors, right? Indonesia is on a big growth curve from a demographic perspective. Why does that matter? Well, in our world, when we think about shifting consumption patterns around food, and by the way, they tend to align with energy, right? You see a growing middle class, you see a really young population, you see stuff rolling over, you see kind of income classes change. That we've seen big populations go through this. That ASEAN region is consolidating itself into another trading bloc like the EU. What does that mean, right? Like all of these things are kind of great opportunities. Dislocations in the market create buy opportunities. Maybe you're looking to buy another business to help with your growth, inorganic growth, or looking to sell. And that's what we've seen. We've seen buyers coming into the market. All of the like crazy stuff that the news kind of yells at us all day, if you step back and you can kind of filter out the trash, it actually all represents a huge amount of opportunity ahead of us. And it's really exciting.
Well, that's spoken like the true entrepreneur that you are. Risk equals opportunity. Now I know that you came directly from a board call, and you've spoken about all these red flags and how failure is a good thing. How do you, as investors and equity partners in these businesses, I know providing growth capital to these businesses is huge, but also as strategic partners and helping grow those businesses with your big brains. When they report back and say, here's yet another fail, yay!
Yeah, woo!
How do you receive that as a strategic partner at the equity level?
Well, one, we try to be very mature about it. These things are going to happen. Failure is going to happen, and candidly, like it's going to happen. We know that, and I think the first thing that's really important is rarely is the failure like should it be kind of taken personally? It's hard to say it kind of that way. Like you pour your kind of soul into building this business and you have the setback, like you naturally are going to take it on. But it's rarely is the failure because you chose to have mini wheats with your daughter for breakfast and not Cheerios. Slow down, like life goes on. It might mean, to be clear, it might mean that life goes on through a winding up of the business and shutting things down, which is a difficult journey. But it's a huge learning journey in and of itself. And what kind of comes of it and the things that are born out of that shouldn't be underestimated. And so the other thing that I think is really important, and it was good advice I received from a mentor early in my life, is when I was in that seat building a business and you get that kind of kick in the teeth moment. And his advice to me was, listen, remember, in a lot of ways, your job is that same as kind of a weather forecaster. Your job is just to report the facts, right? Like you bring the news forward, you bring the weather forward, dear board or stakeholders, here's what happened. Here's what went down. And don't try to hide it. Don't try to sit on it and think if I can fix it and do all these things. It's just like your job's to report the weather. Today it's cloudy outside and this is what's happening. And I think that was I've taken that to heart a number of times, but I think it's a really important lesson to think about because it also helps with like starting to pick ourselves up and make those steps forward, even if those steps are really tough because we're going into a shutdown example, or going through those steps might help find the solution so we don't go that way, we go this other way. And that reporting the like weather and approaching it that way allows people to roll up sleeves. It certainly allows us. Like, kind of one of my comments I like to make is like, listen, we've been in tighter jams before, and in a lot of ways we have. Like, we've been in hostage situations. Like that is a bigger problem than, we missed our quarterly earnings. If we're going to put it in a relative basis, like that's so let's like report the weather and let's move through this together.
Right. I really like that. And I guess as a board or as the CEO, it's then your job to say, hey, have you noticed that it's always a little bit cloudy outside?
Right.
How can we turn that risk into an opportunity?
Yeah.
This is the landscape we operate in, and let's put on our rain jackets, and there's still a good
Yeah.
opportunity here. Or taking your lessons from those failures, I guess, drawing back to the early part of our
Yeah.
conversation. Yeah, I really like that. I think, you know
So
what? I think that's something good that we could end up on. I really value your insights, and we'll keep talking about this over cocktails, I'm sure. But really want to thank you for your time, Wilson. Some real sage advice from the factory floors and the supply chain highways and the intersections that you operate in. So really value your input, and thank you for your time.
thanks for having me. If feel free, people, if you want to kind of connect, you can find me on LinkedIn. And so, feel free to send me a message. And thanks for having me. I'm always happy to keep chatting and really enjoyed it. Thanks, Dave.
Awesome. Thanks so much, Wilson. And to the rest of our audience, we're going to take December off from our AHA webinar. I know everybody's got busy dance cards coming up for December, and before we know it, it'll be the new year. Um, so thanks for participating. Thanks again to Wilson, and look for those flashy CPD certificates in your email. Thanks for being part of the continuing education of Amplify's audience, Wilson. Have a
Pleasure's all
great day,
mine.
everybody. Cheers.